Welcome to the channel Get Rich. Today we are going to look into 6 US stocks I am buying. So before going into the video, so if you like this video, please like, share and comment. And if you want a free email newsletter from this channel, please subscribe in the link below. So let's get started. So today we are going to look into 6 US stocks I am buying. So before going into that, so I'm going to explain some of the few stocks which fell huge. Those are the market leaders, big giant companies in the US market. So the first one is being Meta Platforms. So Meta Platforms, they own Facebook, Instagram and WhatsApp. They are a social media giant. So their stock fell huge. It fell from $384 to almost $208. So that's big. So the main reason being the Apple OS, they recently changed their privacy centric issue, so that they have changed to scan technology. They use scan technology, so it's difficult for Facebook to get more user data from their platform, so that's going to make it difficult for their placing ads to the user. So that's going to impact around $10 billion of revenue of Facebook in the short term. So that's one thing, and also they are facing huge competition from TikTok. So that's the main reason the stock is falling. The market is scared, so they are sending down all of the stock which have even very slightest risk. So first the Facebook, it fell huge, and then the Netflix. You might know Netflix is a huge company, streaming platform. So the Netflix fell from about $700 to almost $386. Haven't seen this level for past 3-4 years. So 3-4 years worth of price action is just vanished. So it's like you go back to 3 to 4 years back and buying this stock. So these prices are like very attractive. And if you look the next one, which is Shopify. Shopify is also a market leader in e-commerce. So their stock fell from 1,750 to almost 660. So their stock fell huge. So that's also a very good company. And then the fourth one is Block, which is previously called Square. It's also a fintech business payment processing company. So this company fell from $300 to almost $100. So almost 74%, 75% of their price action are just vanished. So it's like all of these stocks, 3-4 years worth of price action is just gone. Okay, so these are the main stocks are in the market which fell huge. I want to explain. So then I'm going to explain what are the 6 US stocks I'm buying in the market. So even though I don't know whether you are aware of, if you are even based in India, you can still buy US stocks from India. So if you don't know how to do it, so please ask me in the comment, then I can make a video stating how to invest in US stock from India. So then even if you are not interested in US stock, it's worth to see what are these stocks, what are the key themes or sectors these stocks are from, and how we can replicate in India. So I'm also looking for this kind of multi-burgers in Indian market. So I don't find quite these kind of deals yet, but if I find some of the multi-bloggers, I will also make these videos for Indian market. So currently I'm going to explain these 6 stocks I am buying, and these are 2, 3, 4x multi-bagger stocks I am expecting in the coming 3 to 4 years. So the first one being Dropbox. So as you might all know, Dropbox, it's a huge cloud business. So they have Google Drive or Microsoft OneDrive, same like they have Dropbox. They also have mainly for business and also for local personal usages. So the Dropbox is a well-known company. So their market cap is about $9 billion, and if you look at the price, 52-week price range, they reached 33, and currently they are trading around 22. They recently released their results. They beat the top line, they beat the bottom line, they have a good guidance, but still their stock fell. So it makes no sense. So I'm buying this stock, Dropbox. It's a very good deal at $22. It's a very great deal for the next 3 to 4 years. So if you look at the Dropbox, so they have a cloud business, as I said. So they have a cloud business, and they also own HelloSign, so it's an e-signing platform. They also own DocSend, document sharing platform. These are the 3 different businesses they have. And if you look at their platform, they have 700 million plus registered users. So they have 550 billion plus pieces of content. Even though they have 700 million plus registered free users, their paying users is only 16.79 million. So they can convert some of these free users from 700 million to the paying users. Then they have huge potential ahead, because they are just doing about 1 to 2%, 2 to 3% of their free users they converted into paying users. They still have way more room to grow, and 80% of their subscribers are using for work. And if you look at their new features of Dropbox, they recently introduced Capture. So they have a visual communication tool that helps the team members share their work and ideas immediately. And they also have Replay, which is a video collaboration tool that makes it easier for them to collect, manage and respond to feedbacks all in one place. They also introduced Shop. So it's just a platform to sell digital content creations that users store in their Dropbox. For example, you can directly set up a shop using Dropbox. If you have, for example, digital products like NFTs or kind of templates, whatever kind of digital products you want to sell, you can easily do it using a shop feature in Dropbox. So they're using more and more new features. That's pretty good to see. And if you look at the key metrics of Dropbox, their annual recurring revenue is increasing quarter over quarter. It's almost 2.1 billion to 2.26 billion. So most of their revenue are recurring revenues. That's very good thing. And then if you look at the paying users, so it's increasing from 15.83 million to almost 16.79 million. And also if you look at the average revenue per user, so it's also increasing from $132 to almost $135. That's also good to see. And if you look at the Dropbox long-term targets, so their gross margin is about 82%. They almost reached 81% this quarter. And their free cash flow, they made a goal of $1 billion by 2024. In the recent year, they reached 702 million. So they are also on track. And their operating margin, they made a target of 30 to 32%. Even there, they already reached 31% already. That's good. And if you look at their year-over-year revenue, it's increasing from $1.6 billion from 2019 to $2.2 billion in 2021. And free cash flow increased from $392 million to $708 million. And if you look at the gross margin, it also increased from 76% to 81%. Operating margin increased from 12% to 30%. So they are doing phenomenally well, all of these metrics. And if you look at the analyst estimates for Dropbox, so if you look at the earnings side, their earnings per share or EPS for current year, they are expecting about 1.58, and next year it's 1.7. If you look at the forward P, 1.6 is the current year, and if you look at the forward P, then the next year is 1.7 is expected, and the current price is about 22. Then it's just about 13, 14, 12 to 14 P, 13 forward P. For a great business with a lot of recurring revenues, and their business is going to grow at 10%, not a huge growth like 20-30%, but they are still, the analysts are expecting their revenue. If you see the revenue estimate, current year is 2.36 million, and the next year they are expecting 2.53 billion with revenues growth of about 7.2%, but I'm still expecting them to do 10% year over year. They are always estimating for the previous 4 out of 5 quarters they beat the analyst estimate. So I believe they are going to grow at 10%. That's a decent growth. And if you look into the P, which is just 13, that's, for me, it's ridiculous to see this kind of P. But for me, if I look at if I do analysis again and again in this company, and I feel 12 to 13 forward P is very, very cheap and attractive for this company. So I believe this stock will be about $50 to $75 in the next 2 to 3 years. That's a phenomenal opportunity, 2 to 3x or even 4x possible in this particular company. The risk to reward is very high because they have very minimal risk and they have a very high reward. So that's why I'm pretty much attracted to this stock. And the second stock I'm buying, which is PayPal. So PayPal, they also fell huge from about $310 to almost $105. If you look at the 52-week range, it's from $310 to $105. It's almost 75% of the market value is gone. So if you look into the 1 year target estimate, which is $187 from the analyst, and for me, PayPal is a great business. They are a fintech giant, so they are now also foraying into crypto. So this is also a very, very good company. Let's look into some of their businesses. And if you see, they have a digital wallet, they have a checkout with crypto using PayPal, they have expanding global pay later footprint. They are growing into more and more geographies. And if you look at the Venmo, they recently acquired. So the Venmo, they have Venmo credit card, buy, hold and sell crypto on Venmo. They have a cash a check on Venmo. They have Venmo business profiles, and they're shopping. They have 700 plus merchant leads. They are crypto 40+% first time users. They have also a lot of donations, and they have bill pay. So they are the biggest payment processing platform. And if you look into the active accounts, it's growing about 13%, customer engagement 11%, total payment volume 33%, is growing $1.25 trillion. So the revenue is growing, EPS is growing, free cash flow is growing. So they have about $5.4 billion free cash flow in this year. If you want to understand what is happening with PayPal, so eBay had a PayPal business so until 2015, and then they demerged the business, and then PayPal is listed, and then eBay is using PayPal's payment processing platform, and then now they want to use their own payment processing platform. So eBay is no more want to use PayPal. That's why their revenue is decreasing. But if you exclude eBay, their revenue growth is pretty much growing pretty good. Their revenue guidance is 20 to 24% excluding eBay. They're almost most of their eBay revenues are subsidized now. So yeah, I'm expecting their CAGR to be 20 to 24% growth in the coming years. And if you look at the active accounts, they are growing nicely, and the only concern is their net new active accounts. It's not up to the market, so the growth is slowing down, but I think they are consciously doing it. They want to improve more on the engagement of the existing user than focusing on the current acquiring of new clients. So their number of payment processing, their number of payment transaction also increasing. Total revenue is increasing. If you exclude eBay, their revenue is increasing about 28, 21, 27, 22%. That's good. And if you look at some of their partnerships, they have partnered with Instacart, DoorDash, Fairway, Gap, Roku, Adobe, Oracle. So that's also good to see. They added a lot of their PayPal processing options to these particular companies. And if you look at the global pay later thing, they are expanding into a lot of geographies. And if you compare the digital wallet acceptance among the 1,500 largest online retailers across North America and Europe, almost 76% of the largest online retailers accept PayPal. 27% Apple Pay, 15% Amazon Pay, 13% Google Pay, and then Affirm, Afterpay, ShopPay. And PayPal, it's just a market leader when compared with other companies or other competitors, Apple Pay or Amazon Pay. If you look at the top institutional holders, Vanguard Group, they are having the highest holding with 8%, and then BlackRock 6.5%, State Street Corporation 4%, and so on. So if you want to look at the analyst estimates, so the current year they are expecting $4.66, and the next year it's expecting $5.83. So if you look at the forward PE, so then it's 5.83. They were trading around $105. Then I would say they are trading around somewhere between 17 and 18, if I am not wrong. So 17-18 forward PE for a company who are a market leader and who has a lot of growth potential, 20%, 20 to 23% CAGR of growth ahead. So that's also pretty cheap for a company like this. So I believe their PE is going to re-rate. Once this market sentiment turns around, it's going to have a phenomenal run. So I'm expecting this stock to do about $300 to $400 stock in the next 2 to 3 years. That's 3 to 4x opportunity in this company with a minimal risk. So because they are extremely profitable, they are not a non-profitable company. They have a good free cash flow. They are going to have $6 billion free cash flow next year. So $6 billion is coming around. They can make acquisitions, they can invest, they can do whatever they want. So that's a huge opportunity for them. And if you look at the revenue estimate, so it's $30 billion for the current and then $35 billion for the next year with a 20% sales growth. So that's the analyst estimation, so analyst expectation. So I believe they're going to beat it. So that this is also a second very good stock. So and then the third one, which is Coinbase. So I will not go into detail for the next 4 stocks because I already went into bit of the companies into the first 2 stocks. So the next 4 stocks I just explain their business, and then I will just directly go into the estimate and the price target because it will be too much, and I'm not sure you will be interested in US market or not. So I'm going to keep it short for the next 4 companies. So the first one being Coinbase Global. So Coinbase Global is a leading crypto exchange. It's a crypto platform they have. So their market cap is about 48 billion dollar, and their 52-week range, though, they fell from about $430 to almost $185. They're currently trading at $185. And if you look at the 1 year price target for the estimate of the analyst, so it's $360. Analyst is already pricing in 100% of growth for this particular company. So if you look into the Coinbase stock, so as I said, so they are the huge cryptocurrency platform. They are also getting into NFTs now. They are also getting into, for example, cross-border transaction payment platform. So they are doing a lot of things. So they are the market leader in crypto industry. So they want to be a Amazon of crypto. So if you look into the current year, they did a EPS of 12.93. So their business is all cyclical because they are getting revenue from their transactional revenue. So their revenue is going to be cyclical. So if crypto had a very good price run there, then their revenues are going to be great, their prices are going to run. And then if cryptocurrencies are going to have a bad year, then this stock is going to affect. There's a risk, because this stock is going to be extremely volatile. So if you want a safe stock, the first two are pretty safe, very low risk compared to their higher potential, but this one it's little bit higher risk when compared to the reward we have, because this is going to extremely volatile based on the cryptocurrencies. If we are going to have bear market for the cryptocurrency for the next 2 3 4 years, then this stock is going to hurt a lot. So I believe cryptocurrencies in the long term for next decade or so, cryptocurrency is going to have an extremely good runway. So I believe cryptocurrency is going to have a very great one, and then Coinbase is going to have a very good next decade, I would say. So then if you look at the next year, so the analysts are estimating 6.74 EPS, and even with the reduced crypto EPS, which is 6.74, because they have a lot of one-time gain in the current year. So if you look at the next year, which is 6.74, even then I think 2024 is the forward PE. I believe they have a very good future. So I'm going to estimate $400 to $600 stock in the next 2 to 3 years, but it also depends on the crypto how crypto is going to perform. But in the long term, this stock is going to perform well. But I have to admit that this stock has a higher risk when compared to the first two, which is Dropbox and PayPal. And then the fourth one is Corsair Gaming. Corsair Gaming, they are a market leader in gaming peripherals or gaming accessories. So they have a keyboard, mouse, and also a lot of PC components, high performance PC components, and then they also have headsets, monitors. They are also expanding into a lot of more and more areas. And then they also have streaming components, like for example they own Elgato brand, Elgato mic, lighting setup, and so on. So they are also in streaming categories which are growing much faster. So Corsair Gaming, the current market cap is $2.14 billion, and then if you look into the 1 year price target, it's 28.56 from the analyst. And then if you look at the 52-week range, they were trading around $43, and currently it's fell almost 50% to 22.68. And then if you look at the analyst estimate, they are also profitable. So all the 4 companies are extremely profitable. So Dropbox is profitable, PayPal is profitable, Coinbase is profitable, and Corsair Gaming is also profitable. The current year their EPS is 1.57, and the next year their EPS is estimated to be 1.89. So if you look at the for forward PE, then you have to take the forward earnings per share. So it's 1.89 next year. So 1.89, then they are having almost 12 PE. So this stock I am also estimating it's going to grow about 10 to 15% in the coming years. So the analysts are estimating 12.8% for the next year, with the revenue growth of $2.27 billion from $2.01 billion. So $1.9. Even if you take the next year, it's going to be $2 or so. So then if this company is going to trade around 25 to 30 PE, then it's easily $50 to $60 stock in the next 2 to 3 years. So this company is also going to have 2 to 3 x reward. But then the risk is also limited in this company, because it is already trading at a very, very low valuation, and they're a market leader, and gaming and streaming is going to do only well in the coming years. So I believe this is also a very good risk to reward play. Then the fifth one is the Tattoo Chef. So Tattoo Chef is a food company. So they're a pretty small one. Their market cap is $987 million. This company is based on the plant-based meat business or plant-based food business. So there now lot of people are moving into plant-based food diet. So plant-based meat, plant-based everything plant-based. So this company is in the plant-based food business. So their 52-week range is $25. So it fell from $25 to almost $12, and the 1-year price target of the analyst is $20. So this company is growing like crazy. So this in the current year it's $213 million hit with the price sales growth of $43.5, and the next year is $283 million. It is expected to do about 33%, and then this company is not that profitable. So usually I don't invest in non-profitable companies, but at sometimes if I see it has a very good potential, and it's also growing pretty nicely, pretty good growth, and I would see it's going to be profitable in the 1 year or 2 years. It's going to be profitable in the coming 1 or 2 years. So this stock is pretty good because I'm also very bullish in the plant-based food business. So I want to ride this particular sector also. So there are also many companies like Oatly or Beyond Meat or many companies in the plant-based businesses in US. So if you know any of the plant-based business or companies which are in India, please put in the comments. I would like to know. So then this company, I also believe they are going to do about $30 to $40 stock in the next 2 to 3 years. So I believe their price, they can also triple in price, I believe. And then the last one is Teladoc Health. So it's a telehealth sector. So this sector is, for example, if you want to visit a doctor, if you go to a hospital and you visit a doctor. So this Teladoc is they have a platform where there are a lot of doctors and if you have a mental issues, or if you have a stress, if you want to have a counselor or anybody you want, so you can set up a video call with a doctor, and then you can have a conversation, and then you can have prescriptions and everything in the same platform. So this is like telehealth. I'm also bullish in the telehealth sector. So this sector is also going to boom in the next years. So this company, it fell from $300 to almost $65 currently. So it's a huge fall. And this company, the price target analyst estimating is $131. And if you look at this company is also not profitable. They are growing nicely. So in the current year 2021, they grew about 85%. Next year it is expected to grow about 27%. They're also growing pretty nicely, but this company is not expected to be profitable anytime soon. So this is a highest risk stock, for example, but they are the market leader, and they also have competition because Amazon is now entering into telehealth space. It's one thing, it's good because Amazon is more bullish on this particular sector, but it's also at the same time it's very bad because Amazon is a huge company. They are coming as a competitor to this particular company. So but currently they are the market leader in the telehealth space, and but the one thing is they are burning money, so they are not that profitable. That's a bad thing. That's why this company is a pretty risky one, because they have to turn around their business, but they are doing pretty good in the product side and all the revenue growth and everything, but they have to turn profitable yet. So that's the key risk in this particular company. So I also believe this company has the highest reward because it has the highest risk. So this company, I'm expecting it to $250 to $350 stock in the 2 to 3 years, which is, I believe, 5 to 6x potential in this particular company if it turns around. So these are the 6 companies I want to discuss in this particular company in this particular video. So if you noticed correctly, so what are the key sectors I was bullish on? So the first one is Dropbox, that's a cloud business, and the second one is the PayPal, the fintech business, and the crypto and the payment transaction business. And then the third one is Coinbase, the crypto platforms, crypto ecosystem. And then the fourth one, I believe, is Corsair Gaming, so the gaming and streaming platform. So that's also I'm bullish on. And the fifth sector is plant-based business, so that's also I'm bullish on. And the last one is telehealth. So these are the 6 key sectors I'm looking into. So these are the sectors I am bullish on. So if you know any of the stocks, yeah, in these sectors, please put in the comments below in the Indian market. So yeah, I also know a lot of yeah, Indian market, a lot of businesses are doing in these sectors, but telehealth and plant-based business, I still did not encounter any yeah, companies which are doing it in India. So maybe if you know some companies in this sector, please put in the comment section. So also, if you want me to analyze any other companies, please put in the comment section. So if you like this video, don't forget to like, share and comment, and if you want to subscribe to the free email newsletter, please subscribe in the link below. So thank you for watching and have a nice day. Bye bye.